Are the 8% interest rates scaring you? Hi, this is Realtor Tony Guadnola. This is Realtor Reece Stanley, and welcome to Team Tuesday. Today is Halloween and some people are getting spooked by the 8% plus interest rates right now. Are there ways to threaten those interest rates away?
Depending on your situation, there are some ways you can get a better rate. We talked to Spencer Marsh at PRMI about some ways they are helping clients get a lower rate. These alternatives don't apply to everyone, so it's important to talk to a local trusted lender to find out what would work best for you.
Yeah, absolutely. So to talk about some of those, first up are temporary and permanent buy-downs. On a temporary buy-down, the most popular option is a 2-1 buy-down. Typically, those are seller funded. In this scenario, the rate would start at 2% lower than the current rate for the first year, then 1% less for the next year, then the third year and beyond. That's when you go back to that rate of 8%. So to put it more simply, if the rate is 8%, first year you'd be paying 6%, second year you'd be paying 7%, then the third year you'd go back to the 8%.
Yeah, and for a permanent buy down, you take a combo of seller and buyer funds to buy down the rate permanently via discount points. First-time home buyers are also sometimes eligible for different programs that allow for different rates. For example, CHFA or other various state subsidized programs.
Yeah, absolutely. And so the next step are assumable loans. This is where a buyer essentially can take over the existing loan of the seller, and only government-backed mortgages are eligible for that, such as loans backed by the Federal Housing Administration, that's a tongue twister, or the Department of Agriculture, as well as VA loans. Buyer has to be approved by whoever holds that loan, so buyer has to qualify to assume that loan. The buyer also may need more money out of pocket to pay the seller the difference in their mortgage balance and the sales price of the home.
And don't forget your equity. We talked about this a few weeks ago, but if you're selling your home to buy a new one, the equity you've built up may go a long way. The more cash you put down means you don't have to borrow as much at the current higher interest rates.
And another thing not to forget is if interest rates are lower in the future, refinancing is a great and viable option.
Absolutely. The final thing to keep in mind is that once interest rates start to lower, competition is going to be fierce out there, which means home prices will be high and sellers will be seeing a lot of multiple offer situations. So you may end up paying higher for the house itself than you would now in a less competitive environment.
So don't let these interest rates scare you. You might have some other options. And as we said, it's important to talk to a lender to see what you're eligible for, and they can explain in depth everything that you can qualify for in that capacity. We can help direct you to some great local lenders, so give us a call at 970-589-7700 to find out more. Thanks for joining us on Team Tuesday. Have a great day.